Okay, so welcome to tonight's class. This is going to be the last class for FAC1, FAC3. And then next week we will start with FAC2, FAC4. So what we're going to do, we're going to complete the part B, and then we're going to move on to one of the other requireds that we want to work through. So I'm going to jump straight into the question now so that we can complete it. Okay. Okay, so to date, we read through the scenario, or most of the scenario, and we went through it quite detailed, and we tried to explain it and show you how to read through a scenario. Obviously, in our lesson, we took a bit long, but that is because the lesson was to show you how to read a scenario. Remember, for your guys' purposes, you're going to have to read an entire scenario within 30 minutes. Okay, so you must practice how you're going to read. You must practice how you're going to read within your 30 minutes. So as you work through different scenarios, focus on understanding the scenario and try to go a little bit deep, but not too deep that you confuse yourself. So you need to find the right balance between reading without comprehension and then reading too deeply that you end up going off on a complete different path that is not even there. Okay, so you need to find that balance, and the way you're going to get that balance is by working through a scenario all the time. So you may take a little bit slower or longer initially, but as you read more scenarios, you need to improve the speed, because ultimately you're only going to have that 30 minutes to read, and then you need to start answering the question. Okay, so just try to practice. And so as you practice, make an effort to read as fast as possible while still trying to understand. And I can't stress this even more, that you need to read and read the lines and understand what's happening and think a little, but don't think so much that you confuse yourself. I had a few, especially in undergrad, where students read a scenario and they just go on a complete tangent that they completely get confused and go on a complete wrong angle. So just please be aware. You want to read with comprehension. You want to read and understand what is each line saying, what each paragraph, what each sentence is saying, but make sure you keep it to a basic understanding, okay? And then from there you build. Don't overcomplicate the scenario. So that's what we did mostly on the first day. Then on the second day, we went through part A, going through the loan, the bank loan or the foreign loan that the Chinese company loaned us. So that was a fairly simple question, but it was important to identify which exchange rate to use and when to use an exchange rate and so forth. So that was generally a straightforward question where you should be able to get the full 14 marks. Then yesterday we went through part B. Okay, so part B is a PPE question where you needed to prepare the note disclosure or the PPE note for land, buildings, and plant. And there was a typical opening carrying amount, closing carrying amount, and then the movements in between. Okay, so now we're going to complete that question. What's important to take note, you can see, although they didn't test, although they didn't go into detail, but they have covered quite a few aspects. So they covered borrowing costs. They covered spare parts, how you deal with spare parts. They covered a transfer, investment property to PPE. So those not detailed, but they're still touching on all of those aspects. So remember, each time you lose a mark over there, you are reducing your you are reducing the number of marks you are earning. So make sure those subtleties that you can pick up, and so those subtleties you can pick up, and you can actually, how can I say now, score on those type of marks. So as you can see, they're integrating the question quite thoroughly, although they're just touching on certain aspects. The majority of the question is PPE and impairment, but there's other aspects coming in here that they are touching on, and that's very, very important for you to identify. Okay, so as you work through exam level, not test level, exam level questions, make sure that you pick up on the various aspects that they are touching on. That will give you an idea of the various types of integration. Once again, don't overcomplicate your life, but do think through it. Do sit back and take a moment to understand how they're integrated. So for example, at the end of this question, you need to sit back and ask yourself, what did I learn? Remember, that's one of the most critical questions you need to answer after you have marked your paper. What did I learn? If you can tell yourself what you learned, then you know you're on the right track. If you're unable to tell yourself what you learned, then perhaps you need to re-look into what you actually learned in the question. So please be aware of that. The second aspect where is critical, where is important from a financial reporting point of view, is how you classify an item. So for example, land and buildings was initially classified as investment property, but then subsequently classified as PPE. So don't underestimate. Don't just think when you see land and buildings you think something. Make sure you you must pick up on what is actually happening and how management, how the company is using a particular asset. What is the intention? And that will guide you in terms of classification. Because same with leasing, in the same way they did over here, where they went from investment property to PPE, they can have an item that they are using and now they are leasing, you know, so things like that. Although it's still PPE, but when you start leasing PPE, then you don't apply IAS 16, you apply IFRS 16. Okay, so just keep that in mind. It's very important to pick those kind of stuff up, and that's going to help you to be able to identify small differences and actually score good marks. Okay, so now we're going to go on and actually we're going to complete this question. So we just need to do two things. Number one, do depreciation, or complete the depreciation calculation for plant. And then lastly, which is going to take a bit some time, and that is to do the impairment calculation. Okay, so impairment is a very important topic, but remember, impairment is always going to be tested with PPE. So so just keep that in mind. But impairment generally will count quite a bit of marks because it is something that is very, very relevant. What was I wanting to do? So I want to go to part B. So remember, we need to do depreciation over here, and then we need to do impairment. So let's go over here. Remember, plant, when we dealt with depreciation, and that's something when you deal with depreciation, on every depreciation calculation you will have this, but you want to ask yourself every time you do a depreciation calculation, and you must, and what's the question you need to ask yourself? Must I use the component approach? So with the plant, we will use the component approach. So firstly, plant has more than one item included in the category plant. It is the HDWC plant as well as spare parts. So remember, spare parts is one type of asset, and the HDWC, whatever it is called, that is a separate asset. So the one is a plant and the spare parts is spare parts. But they told us in the question that spare parts is categorized as plant. So they told us spare parts is categorized as plant, and that is why spare parts is included in the plant balance. So included in the plant column, or included in the plant category, there are different types of assets. So there are two types of assets included in plant. The actual HDWC plant and spare parts. So there are two. So you must be aware of this. So in the plant category, same like, let's say vehicles, you can have 5 vehicles. Each vehicle will most likely be depreciated differently, okay? So just be aware of those type of stuff. It does not mean you have one column, it's only one asset. That one column can have multiple assets of that particular category, okay? So just be aware of that. So in this scenario, included in plant is 2 assets, spare parts and the HDWC plant. Now, so the spare parts we depreciate separately, and then the HDWC plant we depreciate separately. But specifically for the HDWC plant, we needed to apply the component approach. Why? Included in the HDWC plant is an inspection cost, and that inspection cost must be renewed every 2 years. So that is why the inspection have a useful life of 2 years, while the plant itself has a useful life of 20 years, I think if I remember correctly. So that is why we needed to separate that. So whenever you see different useful lives, then you must know, or if you see different useful lives for the same asset, then you must know you have to apply the component approach. So take note of those type of small differences, or it's those small things that add up overall to give you that good mark. Okay, so don't lose marks by every small thing. Okay, so here we have depreciation, which is these 2 amounts over here will be the plant, and then this is the spare parts. So the plant and the spare parts, those are the 2 assets that make up the plant category. But the plant is broken up into 2 parts, which is its 2 components, the plant itself and then the inspection. Okay, so now we're going to go do the plant calculation. So working 8. So here we have costs less the inspection. So now we have the cost of the plant excluding the inspection. So that is the cost that we're going to use. Remember, for the plant, the depreciation is based on the straight line method. So therefore, it is cost less residual value. And this will give us depreciable amount. Now, I cannot remember what was residual value. So let's go check. So residual value for this was, let me just see.
Faiz is 280.
So the residual value is 280. So on page 7, you will see there's a table and below note number 1, land and buildings. So under the buildings column, you will see that residual value at initial recognition, 280,000 Rand. Okay, so I'm going to put in here 280, and remember, depreciable amount is cost less residual value. Okay, so once again, even if there's no residual value, train your brain to think that when you do depreciation and you must use a straight line method, it is cost less residual value. So train your brain. So that means when you train your brain, so now your brain knows you must do a straight line method. So when the brain figures out it needs to use the straight line method, automatically the subconscious mind will send the necessary information to say the straight line method is cost less residual value. So as you are reading, you'll be able to pick up if there's a residual value or not. So if there's no residual value, we don't have to put in the line item called residual value. But what you want to do, you want to train your brain to think in a certain manner, that straight line method is always cost less residual value. So you have a certain way of thinking, and by doing that, as you read a scenario, you can already be able to pick up things that are relevant and not relevant, and so forth. Okay, so don't just read a scenario for that scenario purposes. Read it for the topic as a whole. Okay, so that is how that is one of the ways that that helps you to only focus on 3 to 5 questions and not needing to run through the all. So remember, if you look at the stat letter, I think there's 20 case, or there are 10 case studies. 10 case studies of 2 marks, of 2 questions each, of 100. So in there is 2,000 marks. 10 case studies, each one of 100. 10 case studies, each case study with 2 questions, and each question is 100 marks. So in this case, in this title alone, there's 2,000 marks. Many students find comfort if they run through the 20 questions, because then they felt they've studied enough. But I'm telling you, that is not good enough. No matter how many questions you do, if you cannot answer the question, what did I learn after a particular question, then you didn't really learn anything. Because remember, by you running through 20 questions, you are hoping that it's going to come in the exam. But the chance of something what you saw come in the exam, highly unlikely. It's going to be something very new, but the principles they test is exactly the same. So after each question, if you can answer, what did I learn, then you will feel satisfied. And you yourself will know, you will get that feeling that you've actually learned, and you can sleep peacefully at night. But those that can't sleep peacefully at night, the only way they can sleep peacefully if they ran through the whole, all the questions I had available. So please don't be one of those who just cause unnecessary stress. So there we have depreciable amount. So we're going to have useful life, and that is 20 years. And then we're going to have depreciation, annual depreciation. So it's that divided by 20, but we don't want annual depreciation. We want depreciation only for 6 months. The plant was ready for use on 31 August 2019. When was it ready? 31 August 2018. It was ready for use on 31 August 2018. Okay. So the plant was ready for use on 31 August 2018. When an asset is ready for use, that is the date you start depreciating. So because it was ready for use on 31 August, 1 September, the same thing. So it's September, October, November, December, January, February. That is 6 months. Okay, so depreciation for 6 months would be that times 6 divided by 12. Okay, so now we can take that, and this is C57. So if I go over here, I'm going to say equal C57. Okay, so it's going to be equal sum. So now I can go plug that in. So depreciation is negative, so I'm going to say equal negative 152,351. Okay, so there we go. Now we can do the big part of the question. What to do here? Remove that. So the big marks is the addition and going to be the impairment. Okay, so the big marks is the addition and going to be the impairment. Okay, So now you need to think impairment, IAS 36. So how do we think about IAS 36? So remember, I'm only going to talk to IAS 36 relative to this question. I think I had 3 videos on, I think impairment was one of my 3 master classes. I can't remember actually, but I think it was one of my 3 master classes. So you can have a look at those. Now, when it comes to impairment, so when it comes to IAS 36, remember, impairment is only applicable to assets. So basically, every asset has gets impaired. But remember, IAS 36 only applies to certain assets. So for example, inventory is an asset, and inventory also get impaired. But inventory's impairment is under its own standard, IAS 2. Financial assets also gets impaired, but financial asset is impaired under its own standard, IFRS 9. Okay, so which standards does IAS 36 impairment of assets apply to? It applies to all of PPE. It applies to all of intangible assets. It applies to IFRS 5, that is non-current assets held for sale, and it applies to investment property that is measured using the cost model. If you are using investment property, if you have investment property that is measured in terms of the fair value model, IAS 36 do not apply. Okay, so it's very important. So what is the importance of impairment? So remember, when we present amounts on the balance sheet relating to assets, we present it at carrying amount. Okay, so if you ignore impairment, the balance sheet amounts are all at carrying amount. And what's important to understand that when you have an asset on the balance sheet, what are you telling users of financial statements? You are telling them that is our future economic benefits. Whatever amount you have on the balance sheet, you're telling users that is the expected future benefits that is the future economic benefits that we expect. So when an asset's carrying amount exceeds its maximum future economic benefits, we have to impair it. And that is the purpose of the impairment standard. Okay. So the general rule for impairment is the following, that you only perform an impairment test if there is an indication of impairment. So you only perform an impairment test if there is an indication of impairment. If there is no indication of impairment, you do not perform an impairment test. So in the real world, management need to make an assessment whether there are any indications of impairment. And once they conclude that there is no indication of impairment, then they don't do they do not perform an impairment test. However, if they do conclude that there are indications of impairment, then they will have to perform impairment test. Okay, so it's important to take note. So you only perform an impairment test if there is an indication of impairment. There are 2 types of indications: internal factors and external factors. You can read IAS 36 for examples of internal factors and external factors. There are, however, 2 exceptions, or actually 3 exceptions, but let's just keep it to 2. There are 3 exceptions when it comes to testing for impairment. So remember, the general rule is you only test for impairment when there is an indication of impairment. However, if you have goodwill, or if you have an intangible asset with an indefinite useful life, then you have to test for impairment annually. Okay, so that is, you just need to be aware of that. There's a third one. I can't remember what was the third one. I think that's something that's in testing phase, something like that. I can't remember, but there's 3, but the 2 important ones is intangible asset with indefinite useful life and goodwill. Okay. So when we do an impairment test, this is how I think through it. Okay, so the way I think through it is as follows. An impairment test means I must compare carrying amount to recoverable amount. Okay, So I'll compare carrying amount to recoverable amount. Remember, what is the recoverable amount? The recoverable amount is the higher of value in use and fair value less cost to sell. Now we read the scenario, they gave us the recoverable amount, so there's no need to calculate the recoverable amount, but be aware the recoverable amount is the, what did I say now? It's the higher of value in use and fair value less cost to sell. So if you take careful note of this question is going with breadth. Okay, they're testing many things in one required, but they're not going deeply into it. Okay, so they're not asking you to calculate the recoverable amount. Remember, they could ask you to calculate the recoverable amount by you having to calculate fair value less cost to sell, as well as you having to calculate value in use. That is if they decided to have gone deep. Okay, so make sure you are able to calculate value in use. Even more important, make sure you are able to identify errors in a value in use calculation that an accountant provides you. Okay, so make sure that's even more important, because that's one of the ways they will test you as well. So if you can identify errors in a calculation, then you basically know what you are doing. Okay, so make sure you are able to calculate value in use. Make sure you're also able to identify errors in a value in use calculation that you are provided. Okay, so recoverable amount was given to us as 8.5 million. Okay, and then we will have an impairment loss. So when the carrying amount exceeds the recoverable amount, you will have an impairment loss. When the carrying amount is less than the recoverable amount, you won't have an impairment loss. Okay, very important to take note. Now we need to calculate carrying amount. So many solutions would just list the carrying amount below here. What I do, I like to keep my things neat. I have a separate calc. Okay, so I'm gonna have a separate calc for it. So now we need to calculate the carrying amount. So remember, there was an indication of impairment of the plant. Okay, so there was an indication of impairment of the HDWC plant. That is an individual asset. So that's important to take note. So remember, the general rule is as follows, that if you read IAS 36 carefully, you will come to learn that you should impair based on an individual asset. Okay, you should impair based on an individual asset. However, you can only impair on an individual asset if an individual asset can generate cash inflows independently. Now, many individual assets cannot generate cash inflows independently, and as a result, you will then have to have a look at the smallest group of assets that can generate cash inflows independently. So in other words, you have to look for a cash generating unit. So there was an indication of impairment for the plant. So the first thing we ask ourselves is, can I impair the plant as a standalone asset? And the answer is no, you can't, because the plant, the HDWC plant as a standalone asset cannot generate cash inflows independently. They told us that the plant forms part of a smallest group of assets that can generate cash inflows independently, and they gave us a list of assets. Okay, so that means the plant cannot generate cash inflows independently. So because you have to test the plant for impairment, and because the plant cannot generate cash inflows independently, we have to test the entire CGU for impairment. Okay, so that's important to take note. So that is why we're going to list all the assets that is included in the CGU. So let's have a look. So the assets in the CGU, tell us now, okay. Okay, so here's the assets in the CGU. So let's have a look. So we have land, buildings, plant. Okay, so land, buildings, plant. Am I now? So we're gonna have carrying on. So it's land, buildings, plant. What else did I see? Inventory, trade receivables, trade payables. Inventory, trade receivables, trade payables. Okay, so just take note. So those are the items that is included in the CGU. Okay, so just be aware of that. Now, what's also important to take note is the following. And this is obviously where you need to be aware. Okay, so this is what you must just be aware of. They also told us that the foreign loan, somewhere in the scenario they made mention that the foreign loan, they think they should include in the CGU. So we're going to include the foreign loan as part of the CGU. Okay, they told us that they think that the foreign loan should be included. Okay, so they were having a discussion in the scenario. So they're indirectly telling us include the foreign loan in the CGU. Okay, so that's one thing to take note. And the second thing you must take note, because they're never going to tell you this, okay, is that remember, included in the plant is a decommissioning liability. So remember the decommissioning liability, the journal entry looks as follows: debit plant, credit decommissioning liability. So we have it in the asset. So don't forget, you also need to bring it over here. You actually need to show the liability separate as well. Okay, so decommission, whatever it was called, decommission liability. Okay, so these two was not in the list, but based on the scenario, you must know you had to have included it. Okay, and this is the benefit of when you practice, you will pick these kind of stuff up. So so for example, if this was me when I was a student, I probably would have included these. Okay, and I'd have missed foreign loan, I'd have missed decommission liability. So now when I mark myself and I look and I see, okay, my answer is wrong, or not wrong, my answer is different to the solution, then I look through, why is my answer wrong? Where did I go wrong? Okay, or not why is my answer wrong? Why is my answer different? And where did I go wrong? Then I'd have picked up, okay, I only included these and they included all of this. So where did I go wrong? I went wrong by not including those two. Okay, so now I mark myself and I see I have a difference and I identify why am I different? Where did I go wrong? So where did I go wrong? I only would have included that if I was when I was a student. I would probably only include that, and I wouldn't have included that because it wasn't in a table. I probably wouldn't have. I'd have forgot about the decommission liability. I probably would have no idea what to do with the foreign loan. So that's the difference. So now I picked up where I went wrong. The next question I'm going to ask myself: why are they including it? Okay, so I didn't include it because I don't know why. I didn't include it because I didn't know I had to include it. They included it. Why did they include it? Then I'll try to find reasons and see if I can figure out why they included it. So at that point in time, right there and then, I process stuff into my brain that, okay, I was on the right track, but the only reason why I had a different answer is that I did not include foreign loan, I did not include decommission liability. So now I know that's where I went wrong. Now I'm going to say, okay, why? So the decommission liability, it wasn't mentioned in this in the table of the list of assets and liabilities, but the plant has a decommissioning liability. There's two parts of the journal entry: debit plant, credit decommissioning. So if the decommissioning relating to the plant is included in the plant, then certainly the liability aspect also needs to be included in the CGU. The foreign loan, we're including the foreign loan because the foreign loan is the foreign loan relates to the plant, and so that means the plant forms part of the CGU. So anything relating to the plant also needs to form part of the CGU. Okay, so the foreign loan relates to the plant. If the plant wasn't there, we wouldn't have had the foreign loan. So because the plant is included in the CGU, the foreign loan must also be included in the CGU. And they kind of discussed it in the scenario that they think they should. It does not mean if they think they should that you must include it. You need to also find out whether their thinking is correct. So right there and then, I learn. So the next time I do an impairment question or PPE question, I'll tell myself of the issues I got, of the issues I fixed in a previous question, so that I don't do this mistake again. Okay, so that is basically what you want to do. So no matter, even if you do 3 to 5 questions, you're covering almost the entire syllabus by just this level of thinking. So there's no need for you to do 20 questions. Okay, so just be aware of that. So now we have the list of assets. Now the next important thing is to include the, the balances. Okay. Let me just actually do this. Okay, so this is carrying amount at 28 February 2019. It needs to be the carrying amount at the date that the impairment test is being performed. The impairment test is being performed as at 28 February 2019. Okay. Okay, so now we're going to put in land. We have land. Land we take from the part B. So if we land, we'll take at part B, which is 1650. Buildings is going to be 2320. Okay, so land 1650 coming from our actual answer, 2320 coming from our actual answer. What was I doing? What was I doing here? Okay, next, what we want to do is the following. Okay, we'll come to plant just now. Let's look at inventory. So if we go to the scenario, and we look at inventory, what did they say about inventory? Inventory. Okay, so they say included in inventory is fiber optic cables to the value of 875. So remember, in the table above, inventory is currently sitting at 3,280,000 rand. So 3,280,000 rand. So they say included in inventory is fiber optic cable to the value of 875. Okay, on 1 September 2017, Cable signed a non-cancelable 2-year contract with Fox Ltd to supply the telecommunication company monthly with 1,000 fiber optic cables at a fixed cost of 210 per meter for the first year of the contract and a fixed rate of 225 per meter for the second year of the contract. For the first year of the contract, Fox So the first year of a contract with Fox, Cable had a supplier who supplied the fiber optic cable to Cable at a fixed rate of 180 per meter. So as you can see, Cable bought the fiber optic cables for 180 and sold it for 210. Okay. So now they say, due to unforeseen circumstances, the supplier was liquidated after the first year of a contract between Cable and Fox. Cable had no fiber optic cable on hand at 31 August 2018. Cable purchased all required fiber optic cable for the remainder of the contract. Cable could only acquire fiber optic cable at the price of $250 per meter. Okay, so there you can see 1 September, okay. Okay, so as you can see, we per meter, 1,000 meter. Okay, so as you can see that we are selling to them at 225, yet we are buying at that 250. So we're making a loss. So inventory needs to be reduced. So what we're going to do, we're going to have a separate calculation for inventory. Okay, so let's have a look how we're going to calculate inventory. So what I'm going to do, I'm going to have a separate working 11. So inventory what was it amount now? I cannot remember. So inventory 3280. So inventory is 3280. But we know there's an adjustment we need to make. What is the adjustment? Is that we're making a loss. So what is the loss that we are making? Okay, so adjust for loss. So what is the loss? We are selling at 225 per meter for 1,000 meters. So we are selling 225 per meter for 1,000 meters. Okay, so that's what we're making. But we are paying, what cost is 250 Rand per meter, and we have to buy 1,000 meters. Okay, so what is happening over here? We just see them. We just quickly see cable optic. So it is inventory. So remember. I'm sorry about that. I thought I just escaped from the room. So remember, what they are doing is they are supplying 1,000. They're supplying 1,000 meters of optic cable per month. Okay. So remember, We are supplying this from 1 September 2018 up until 28 February 2019. So that is 6 months. So it is September, October, November, December, January, February. That is 6 months. So just take note of that. So if we have a look over here, let me just see what's happening here. So you can see what's happening over there. We're making a loss of so you can see we're making a loss of 25,000 Rand per month. But remember, that is per month and there's going to be 6 months. Okay, so loss per month. But we have 6 months. Okay, 6 months. Remember, it is from 1 September 2018 up until 28 February 2019. So if I say that times 6, we're making a total loss for the year, for the financial year ended, of 150,000 Rand. So that means the inventory balance must be adjusted for 150,000 Rand. So let's have a look. So the loss is going to be 150. So therefore, the adjusted inventory balance that needs to be included as part of the CGU is as follows. Okay, what do I want to do? Adjusted inventory balance. Okay, so adjusted inventory would just be the sum. Okay. So over here in my inventory, I need to have 3130. Okay, so just be aware of that. And this, okay, so this is going to come from working 11. So it's important to take note. Your balance, you need to include the correct balances in your calculation of the carrying amount. Okay, so that's important to take note. Okay, the next one would be trade receivables. If you go to the scenario in trade receivables, under the cash generating unit table, they gave us, where is that now? Okay, so they gave us trade receivables, including allowance for expected creditor losses of 1,210,000 Rand. Okay, so, but they also give us note number 3. So when we go look at note number 3, it says Cable recognized an allowance account for credit losses relating to debtors amounting to 145 for the year ended 28 February 2018. This allowance account for credit losses, which is included in the 1.2 million, should be adjusted to 105 for the year ended 28 February 2019. Okay, so that means it's going to be a similar adjustment to trade receivables as we did for inventory. So what we're going to do, we're going to say working 12, and I'm going to have trade receivables. So for trade receivables, the balance is 1210, 123. Then we need to make an adjustment. Okay, so adjustment for allowance. Adjustment to allowance for credit losses. So remember, the balance at so Feb 19, it needs to be 105. Feb 18, it is at 145. So therefore, the adjustment is the difference. Okay, so expect the allowance to reduce. Okay. Okay, so what's important to take note over here? Included in the 1210, is trade is an allowance of 145. Okay, so included in the 1210 is an allowance of 145. However, what should be included in the 1210 is an allowance of 105. Okay, so just be aware of that. So what does an allowance do to trade receivables? It reduces trade receivables, right? So if the allowance is decreasing, should trade receivables be more, or should trade receivables be less? So trade receivables should be more, because included in the 1210 is an allowance of 145, but we only want an allowance of 105. So we should have only reduced trade receivables by 145. We should have only reduced trade receivables by 105, but we actually reduced it by 145. So therefore, to make the adjustment, we need to add back the 40,000 Rand. Okay, so therefore the adjusted trade receivables would be as follows. Yeah. Adjusted trade receivables. Okay, so the trade receivable balance would be 112.50. Okay, so that's very important to understand that over here, right? Just make sure you include the correct balances, because remember, getting to the correct balance would be a lot of the marks lies in over there. That is why they never gave us the carrying amount of the CGU, because we are required to calculate the carrying amount of the CGU. So, so to get to the correct amount of the carrying amount of the CGU lies a lot of marks. Okay, so just be aware of that. Okay, so the next is going to be the trade payables. So the trade payables. So the trade payables, if you go to the balance, there you can see the trade payables was given as 786,828. 786,828. So that's the trade payables, but they gave us a note number 4. So let's go look at note number 4. So you may assume that this figure has been calculated correctly for the year ended 28 February 2019. Okay, so So take note that that number is correct. Then they say the recoverable amount of the plant's cash generating unit cannot be determined without consideration of this liability. Okay, so that means it needs to be included in the CGU. Okay, so trade payables needs to be included in the CGU. So what you can take note that when you calculate the carrying amount of your CGU, the carrying amount of the CGU and the recoverable amount of the CGU needs to be apples with apples. So whatever you include in the carrying amount should be able to be included in the CGU, or in the recoverable amount, or vice versa. Whatever can only be included in the recoverable amount should be included in the carrying amount, so that you're comparing like for like, so that the impairment loss amount is not incorrect. Okay, so that's very important to take note, and that is why they're saying that the trade payables needs to be included in the carrying amount of the CGU, because the recoverable amount cannot be determined without including the trade payables amount. Okay, so what was it now? 786,828, I think. Just make sure that I have the correct number in over there. Okay, now for the foreign loan. So let's have a look for the foreign loan. Remember, we did part A. So what was the balance of the foreign loan as at 28 February 2019? What was the balance of the foreign loan as at 28 February 2019? And that we have in part A. So in part A, I think I had it here somewhere. So the balance of the loan as at 28 February 2019 would have been the sum of those two, which is 2832. Okay, so that's coming from part A. So the foreign loan is going to equal 3108123 minus 276,123. Okay, so that is the loan. Now the foreign loan is a loan. So assets are positive, liabilities are negative. Okay, and now we must do the decommissioning liability. So let's have a look. What do they say about the decommissioning liability? So below note number 4 under trade payables, there's some information given to us over there. They say your team anticipates that Changhong will gradually increase its HDCW market share in South Africa after the company has moved its business to the planned industrial park in Limpopo. On 28 February 2019, your team therefore indicated that the plant has a remaining useful life of 10 years, whereafter it will be dismantled at a cost of 500,000 Rand. Okay, so what we're going to have to do is that we're going to have to work out the present value given this information and compare it to the current present value of the origin, and compare to the present value of the original estimates. Okay, so let's have a look. So for the decommissioning liability, we're going to apply working 13. So for working 13, how are we going to calculate? So we're going to you need the present value as at 28 February 2019 using the new estimates, and you need the present value as at 28 February 2019 using the original estimates. Okay, so doesn't matter. So I'm going to start with the new one. Okay, so we just call this new estimate. Okay, so we want the present value, therefore we need future value, we need PMT, we need N, and we need I. We need N. Okay, so we want the present value. What am I doing here? So the future value in 10 years time is 500,000. PMT is your fixed regular payment. There's no fixed regular payment. N is 10 years. But remember, N represents the remaining compounding periods. Now, remember, the pre-tax discount rate was given to us as 10% compound per annum compounded monthly. So because the rate is on a monthly basis, N needs to be on a monthly basis. So therefore, the number of monthly periods is 10 years times 12 months per year. So that's 120. And then over here, I is going to be 10% per annum, but it's compounded monthly, so we divide by 12. So what you take note over here, number of compounding periods is 12. Number divided by the number of compounding periods is 12. So it's like for like. Okay, just take note of that. Okay, so present value. What am I doing here? Present value. I in I in PMT future value, and then you must in Excel or Google Sheets you need to say whether it's end of period or beginning of period. So we're paying at the end, so therefore we make it 0. If it was beginning of period, we use the number 1. Okay, so that is the present value of the new estimate as at 28 February, as at 28 February 2019. Now we have the original estimate. Okay, so now we have the original estimate. Okay, so the original estimate, once again, we're going to do this. Okay, so the original estimate, I cannot remember what was the information, we just go check. So the original estimate was given to us, I think in HDWC. Yeah, so the original estimate was 750,000 Rand after 20 years. Okay, so 750,000 after 20 years. Okay, so after 20 years, so once again, we want the present value. So we need the future value. So the original estimate, the future value was 750,000. PMT, there's no fixed regular payment, so it is 0. N, remember, N was, the original period was 20 years. So 20 times 12 months gives you 240 months, right? But now take note, what you need to take note of. 6 months have already passed. So remember that the asset was ready for use on 31 August 2018. So that means September, October, November, December, January, and February, 6 months have passed. So we need to use the remaining period. So the remaining period would be 20 years times 12 compounding periods per year minus 6 months that have already passed. Okay, so that is 234. I is the same, 10% divided by 12. So if we work this out, it is present value as at 28 February 2019. It is that I in PMT future value, end of periods are put in 0. So the present value over here is 107. So based on the original estimate, the present value is 107. But based on the new estimate, the present value is 184. So what's happening to the liability? Based on the original estimate, the liability is 107. Based on the new estimate, the liability is 184. So we need to move the liability from 107 to 184. What's happening to the liability? The liability is increasing. Okay, so the liability is increasing. So what would the journal entry be? So the liability is increasing, a liability increases on the credit side. So if this had to be the journal entry, it would have been decommissioning liability. Decommission, I don't know how to spell this stuff. Decommission liability. We are increased it. So this is SFP. And then for every credit, there must be a debit. For every credit, there must be a debit. So when there's a change in estimate and the liability increases as a result of a change in estimate, either through a change in estimate of the useful life or a change in estimate of the amount or the change in estimate of the rate, then you must, because of that, then we would have to adjust the liability and adjust the asset to which the liability relates. So the asset to which the liability relates is the plant. So what is the adjustment? This is also SFP. So what is the adjustment? The difference between the two. Okay, so the difference, the adjustment is what we want minus what the liability is currently sitting at. So the adjustment is an increase of the liability. Okay, so I need to make an increase of the liability of 77. And for every credit, there must be a debit, an increase of the asset of the same amount. Okay, so just take note of that. So this is what we have to adjust the asset with. There's no need to apply depreciation on that 77 because the adjustment is only happening as at 28 February 2019. If the adjustment happened at the beginning of the year, then we would have to determine depreciation on that amount. Okay, so just be aware of that. So the liability, what we want the liability to be? 184. So we will use that in the decommissioning liability, which is C94. So over here, it will be equal to C94 because the liability needs to be 184. For the plant will be what we currently have over here. It's going to be that amount plus, it's going to be that amount plus the 77, plus the 77,000 Rand. But remember, we need to include the 77,000 Rand over here. So I'm also going to say working 13. So there's an addition to the plant. So I'm going to say plus working 13. Okay, this needs to be negative. Okay, so there you can see the plant now increased because it was the original workings as at 31 August 2018, plus now the adjustment to the plant as a result of the decommissioning liability. So this year, the decommissioning liability, it impacts PP, but it's principles of IAS 37. Okay, so it's the principles of the provisions standard. So just take note, they're bringing provisions in here as well. So therefore, the plant is now sitting at 4953. The plant is sitting at 4953. Whatever that, what was it? 4953, whatever that answer is. So let's just see what the answer is. So the plant is going to be basically that plus that. Okay, so just be aware the plant is going to be 4953. Okay, so this is going to be, where do we get that number from now? Yeah, so you just need to figure out where you're going to get that number from. So that is basically what the plant is. It is the carrying amount plus the adjustment to the decommissioning liability. So therefore, the carrying amount of the plant is what? The carrying amount of the CGU, sorry, is the sum of all of these. Okay, so that's carrying amount of the CGU, 9.5. That is working. What working is this? Working 10. Okay, so I'm going to say that 9.5. I'm telling them they can go look at working 10 if I am wrong. Remember that UNISA marks your workings. Okay, so just take note of that. UNISA is not going to mark that number. They're going to mark it over here. Okay, so just be aware of that. That is why it's important. If you follow the way I set it out, then make sure you reference, because when they see 9.5, you have 0 at this point in time. So when they see working 10, they're like, okay, cool, let me go look where's working 10. Now they see working 10, then they will mark these numbers over here. Okay, so take note. The 0 for that number, full marks for how you got to the number. Okay, very important. Don't lose marks by not referencing workings. Just be aware of that. So now the question comes, should you have an impairment loss? So remember, you only have an impairment loss if the carrying amount is more than the recoverable amount. Okay, if the recoverable amount is more than the carrying amount, then there's no impairment loss. So because the carrying amount is more than the recoverable amount, we will have an impairment loss. Okay, so the impairment loss is the impairment loss is 1 million rand. Now we need to allocate that 1 million rand. Just want to give me a tissue quickly. Okay, so now I'm back. So as you can see, there was quite a bit of marks in the 9.5. They could have complicated it further by asking you to calculate the recoverable amount. And in that, you must be able to calculate the value, the fair value less cost to sell, and be able to calculate the value in use. Please make sure you read through the accounting standards on value in use. In fact, you can actually just read the notes on the website. So if you go to the Eduon's website, under Resource Hub, you will see there's impairment notes. And if I remember correctly, I think I covered all the important aspects of how to calculate the value in use. So the way if I remember correctly, the way I worded it is to help you identify issues, is to help you spot errors in a calculation that is given. So if you are able to spot the errors in a calculation that is given, then that means you're able to calculate it as well. Okay, so you can just read. So there's no need. I mean, it's better to read the actual standard, but if you want a quick summary, then you can read the notes it's on the website. The Resource Hub is free. It's available to anyone. So then make sure you're able to do that, because if they give you that, that's big marks. Okay, so just be aware of that. A typical way of giving that question, if it's given to you and you must spot the error, in most cases, the way the accountant would have calculated the amount. So one of two issues come up here. Okay, one of two typical ways that they'll give this scenario. So one, the calculation is performed and is not in line with IFRS, with IAS 36. So then you need to spot the error. The other way is that the company performed some form of valuation, right? Or like did a calculation, but using corporate finance principles. Now, the corporate finance principles does not align with what accounting wants. So what they'll do, they will say the management or the FD gave you this calculation that was done in accordance with corporate finance principles. So in corporate finance principles, the answer is correct. For whatever reason, they used it for financial management purposes. But for financial reporting purposes, it would not be correct. Then you must be able to pick up the differences. So the typical differences would be as follows, that the discount rate used from a corporate finance point of view is an after-tax discount rate, but for financial reporting purposes, we use a pre-tax discount rate. The cash flows in a corporate finance calculation would most likely be after tax, but the cash flows for financial reporting purposes needs to be before tax. The reason why financial reporting use numbers before tax is because tax is accounted for separately in the line item called income taxes. And that is the reason why accounting always takes numbers before tax. Then another typical issue is corporate finance or financial management will use an explicit period, and the explicit period for financial management is the longest period that they have reliable information. For financial reporting purposes, the explicit period should be limited to 5 years. Okay, it can be more than 5 years, but there are certain criteria that needs to be met. So in most cases, you're going to have to use limit it to 5 years. Okay. Hello. Okay, and then another typical thing is in corporate finance, they may have performed the calculation taking into account instances where the asset has been improved. For financial reporting purposes, when you work out the value in use, you should not take into account cash inflows nor cash outflows relating to improving the asset. It needs to only include cash flows of the asset in its current condition. So those are the 3 to 4 important aspects relating to the calculation of value in use. and you being able, so either to calculate it and using the correct figures, or you given a calculation and spot the errors and need to either explain or make the necessary adjustments. So don't underestimate it. It's a typical question that comes up. So if they feel like testing it, so make sure you're able to do it. Okay. But anyway, we now need to do this impairment adjustment. Okay, we need to do this impairment adjustment. I just really need to open the door for someone. Okay, thank you for waiting. So now that you have carrying amount and now that you have the recoverable amount, the question you need to ask yourself, do you have an impairment loss? The only time the only time you need to recognize an impairment loss immediately through profit or loss is if the carrying amount exceeds the recoverable amount. So as you can see, the carrying amount does exceed the recoverable amount. So therefore, the impairment loss of 1 million needs to be recognized in profit or loss immediately. So immediately means in the current financial year. Okay, so in the financial year ended 28 February 2019, we will have that. Okay, a 1 million rand loss. Now the question is, against which assets do we take the 1 million rand? Okay, so remember the general rule is as follows. You first allocate impairment loss as far as possible against goodwill. As you can see in the CGU, there is no goodwill. Okay, so now all you have to do is to allocate it to the assets where I-36 applies on a pro rata basis. The pro rata basis is based on the carrying amounts of those assets. So just to give you the full picture, this is how you would do it. Okay, so this is how you do it. Allocated against goodwill. You don't have to do this because there's no goodwill in this question. I'm just showing you. So in the event you get a goodwill, you almost likely, then you must know what to do. So that means how much you're going to allocate against goodwill? As much as possible. So if goodwill is 1.5 million, you allocate the full 1 million. If goodwill was 800,000, you allocate the full 800,000. Okay. So in this case, there's no goodwill. So how much can we allocate against goodwill is 0. So the remaining impairment loss. So the remaining impairment loss. The remaining impairment loss would be 1 million minus what was allocated against goodwill, which is 1 million. So therefore, in this scenario, there's no need to do this line item. I'm only doing it for illustrative purposes in the event that you do get a question with goodwill. Okay. So now we're going to have to allocate. Okay, so now we're going to have to allocate against the remaining assets. So remaining impairment loss allocate, you must allocate it to the assets that fall within IAS 36. So which assets fall within IAS 36? It is land, it is buildings, and it is plant. Okay, inventory, you don't allocate against inventory, because inventory has its own impairment standard under IAS 2. Trade receivables, you do not allocate against trade receivables, because trade receivables is a financial asset, and financial assets have their own impairment standard in terms of IFRS 9. Not against trade payables, because trade payables is a liability. You do not allocate against liabilities. Not a foreign loan, for the same reason as trade payables. Not decommissioning, because same reason as trade payables. You do not allocate impairment against a liability. So therefore, the assets available: land, buildings, and plant. Now, remember, we won't allocate against land, because land, we are using the revaluation model, right? So for land is using the revaluation model. And remember, it's not that you can't impair land, but land is already at its recoverable amount. Remember, when you perform an impairment, the impairment cannot, once you allocate an impairment cannot reduce an asset below its recoverable amount. So land's balance of 1650 is its recoverable amount. So therefore, we won't allocate anything to it. So the only thing we will allocate against is buildings and plant. Okay. So asset. Okay, so it's going to be buildings, plant. So the reason why we're not allocating against land is an asset that can, that impairment can be allocated against, because land is PPE. But if you had to allocate against land, we're going to have to do a reallocation, because remember, once you allocate impairment, you have to test whether the carrying amount of the impairment is not below the asset's recoverable amount. Land's balance is its recoverable amount. So if we must allocate anything, we're going to have to do a reallocation. So therefore, there's no need to allocate to land. So just keep that in mind. So now we're going to have carrying amount before impairment. Then we're going to have impairment, and then we're going to have carrying amount after impairment. Okay, so all I'm going to do, I'm going to take those amounts over there. So remember, how do we allocate? We allocate we first allocate an impairment loss against goodwill as far as possible. Then any remaining impairment loss, must be allocated against the assets that fall within the scope of IAS 36. So these assets fall within the scope of IAS 36, so we're going to allocate amongst them. How do we allocate amongst them? We allocate using a pro rata basis based on carrying amount. Pro rata basis based on carrying amount. So what do we mean? Pro rata means, there we go, pro rata buildings as a percentage of total. So that is pro rata based on carrying amount multiplied by impairment. Okay, same thing over here. That as a percentage of that is pro rata based on carrying amount multiplied by the remaining impairment loss. Okay, so if I add this up, I get to my 1 million. So carrying amount after impairment would be that minus that, and that minus that. Remember, there's another step after this, but it's not applicable in this scenario. Once you do this step over here, you need to do another step. And the other step is to ask yourself a question. Is the carrying amount after impairment less than the asset's recoverable amount? Now, they never gave us recoverable amount for plant and for buildings, so therefore it is fine. Okay, actually they gave us for plant. I mean, I think they gave us for the buildings. So the building was like 2.4. So you can see that the recoverable amount of buildings is not less than the carrying amount after. So no, it actually is. We just go check quickly. Yeah, so they never gave us. So they never gave us a recoverable amount, or they never gave us a recoverable amount as at 28 February 2019 for these two assets. If they did do it, we'd have to do a comparison. Okay, but I'm not going to get into that details. I'll share some of my videos on impairment, and then you can have a look through it yourself. Okay, so just take note. That is how we will do the allocation. So if we go complete this question now, so using working 9, we can actually go and say impairment through profit or loss reduces. So we're going to say minus. So for buildings, it's going to be 318. And for plant, for plant, it's going to be whatever, 600. And I'm going to tell them they can have a look at working 9. Okay. Okay, so now we can complete this over here. So gross carrying amount, it's going to be that plus that. Land has no depreciation, so they won't have accumulated depreciation. So therefore, carrying amount is 1650. Okay, so 1650 as we expected over there. Then over here, it is going to be cost, accumulated depreciation is going to be depreciation plus impairment. So as you can see, the 2001, what we expected, 2001. Okay, same thing over here. We're going to equal to cost. Then it's going to be depreciation plus accumulate plus impairment, sorry. Okay, so it's 4272. 4272. Okay, so makes sense. So that is basically this 36 marks sorted out. As you can see, there was a lot going on over here. They went broad They never went deep. Okay, so they went wide, not deep. They could have gone wide and deep, or, but then probably been like a 50-marker question, or they could have just gone deep on one particular issue, but they went broad. When I say broad, they tested decommissioning, they tested component approach, they tested the cost of an asset, the cost of an asset at initial recognition. They tested impairment, they tested revaluation, they tested transfer, they tested borrowing costs. So they tested a lot of things, okay, but they never went deep. They could have gone deep by requiring you to calculate the borrowing costs. They didn't. They gave you borrowing costs. They could have gone deep by asking you to calculate value to calculate the recoverable amount, and more specifically, to calculate each component of the recoverable amount. They didn't. They gave you the recoverable amount. Okay, so just be aware of those type of stuff. So for me, so the way I used to study, I wasn't as like I spoke to quite a few of you, and you guys are very diligent. So well done, and keep that up. I was far from diligent. So I could only really get through 2 to 3 questions. Ideally, I would like to have gotten through to 5, but 2 to 3 was kind of okay-ish for me. I would get me what I need. I could get me my 50%. So so basically, what I would have done is the following. So exactly as I told you, when I came over here, after I'm done marking, like I explained to you with the foreign loan and with the decommissioning liability, over here, I would have, when I'm done with this question over here, because I know I couldn't get to another long question. So when I come over here, I'm happy that I got 9.5. It was quite detailed. But now I look at recoverable amount, and I see recoverable amount was given. But I very well know they could have easily asked me to calculate the recoverable amount. So right there, I would go and I would ask myself, how can I calculate the recoverable amount? I'd open up my standard and I'd go look at it. And if I need some explanation, if I needed an example, I wouldn't go do a full-on question. All I did was, so UCD obviously used to give us stats, and the stats were like, was grouped based on topic, right? So when I know impairment, so I know it's an impairment issue, so I'd go to the impairment pack, and I'd just page through. So UCD gave about like 3 to 5 tutorials every week per topic. So impairment would have like 3 to 5. So all I do, I'd page through the 5 impairment questions, and I look for, and I'll go to the specific to the solution, and I look for a solution that would require calculation of value in use. The moment I find it, then I go to the scenario. I just read that aspect of the scenario, and in my head, on a piece of paper on the side, I'll try to calculate the value in use, and then I'll compare my answer to the solution. If I got it right, I'll make sure I got it right because I actually knew it and not by chance. If I got it wrong, I'll ask myself the same question I did with a foreign loan and with what you call it. Where did I go wrong? Why did I go wrong? And how do I fix it? So then I'm done. I didn't go do the entire question because then I would never have gotten done. So that is what I used to do, right? So it's not the best strategies. What you guys are doing is probably far more better. But fundamentally, what I did right is what my friends and peers did, and that is we didn't just answer a particular question. You actually went through your answer in a lot more detail and understand what you got right, why you got it right, what you got wrong, why you got it wrong, and just sit back for a moment and try to understand. What did you learn? Like I struggled with financial instruments. the way I got a grips to financial instruments was quite surprising. I met up with two of my friends, and we decided, because we were three of us. Two of us didn't know financial instruments. One guy said he knew. So we said, okay, we're going to do financial instruments together. So what we did was we took like 100-mark financial instruments question, one of the complex ones, and we just basically read through the scenario. Each of us in the same room, we read it on our own. Once we were done reading, we took like about 10 to 15 minutes to understand what was actually happening, and then we saw what we thought was actually happening. Once we had some idea, we said, okay, that's enough now. Let's try to answer the question. We didn't go write down the answer. We literally just sat and we thought in our head, how do we actually do this? I got mine completely wrong. My other friend also got completely wrong, and we just like, okay, I have no idea. So explain. So the one guy who knew it, he explained. And as he explained, we like discussed. Then he say something, and then I'm like, okay, but what about this? Other guy asked, what about that? Then we tried to re-explain it back to him. And literally when I left that day, I knew financial, once I knew it, but I had a good basis. And then the next day, I literally sat with financial instruments using what I kind of learned and see if I could actually answer financial instruments question. And from that point in time, I kind of got financial instruments. But the important aspect, what was important from that was we didn't just like, I had no clue about financial instruments. I struggled with financial instruments. So at UCT, they used to do it in April. So you wrote it in April test, and then in the June exam. So the April test, I failed miserably. I had no clue how to do financial instruments. And then for the June exam had a big weighting. And after the June exam, UCT decides whether you will continue for the remaining of the year or not. So obviously, I did not want to continue for the remaining of the year, because if you don't make it a certain percentage, they put you onto a 2-year program. The success rate of the 2-year program is like basically, I think it's close to 0. So you might also just come back next year. So I didn't want that. So what I did, so I made sure, but obviously financial wasn't going to be the big topic. So I made sure I could know financial instruments for the June exam. And the important aspect was, it wasn't about running through thousands of questions. We literally picked one financial instruments question, and why that one? It was for 2 reasons. Number one, it was complex. Number two, it was it covered every aspect, or at least all the major aspects of financial. I think it was a 100-mark question, and it was like a proper financial instruments question. So when the whole point was, it was the discussion we were having to try to understand what are we learning. We didn't care about the answer. Yes, we obviously wanted to get the answer right, but the most important aspect in that was, why was the answer that? Because remember, in the next financial instruments question, it's not going to be that, but how you got to the answer was the important aspect, and that is what we worked on. So, and then I just applied that same way of thinking for every other going forward. Why is the answer that? What is the process of thinking? What are the things that I need to consider in order to get to the right answer? And it's not about getting to the answer, but more about, how did I get the answer? What was my thought process? Can I replicate this thought process over and over and over? And that is what you need to try to get to. So it's not so much about getting to 2001. It's not so much about getting to that or to that or to that. It is about, how did I get that? Is my way of thinking a manner that I can replicate every single time? Obviously, with different questions, you're going to have a slight tweak, but you don't want it to be radically different. Okay, so that is what you want to try to get, so that when you come to the exam, remember, these guys that sit in your exam, they are professors. They know these stuff. Probably most of them are probably consultants they do like sideline jobs, or they have like their own businesses, or they do some kind of consulting. So they use real world experiences, right? And they use that to actually set up a question paper. So Every experience in the real world is different, but the principle, and ultimately what you want to get to is to follow a certain principle, and you need to get that thought process right. Then you're going to see things will become a lot easier. So there is no need. So if you don't develop that way of thinking, then you're going to have to run through 10 case studies, because then hopefully a combination of these, what you learn in the 10 case studies, you'll be able to answer in an exam. But if you spend time actually developing that way of thinking, then you don't need to run through 10 case studies. When you go sleep at night, you will sleep peacefully, as opposed to going to sleep tonight actually knowing, like, I ran through 10 questions today or 5 questions today, but I still don't know what is happening, as opposed to someone running through one question, one question, whether it's 50 marks, whether it's 100 marks, run through one question, but when they go lay, they're happy that they know they have learned. So make sure your focus is on quality. Remember, you need to get through most of the topics, right? You can't just focus only on impairments. You need to go through most of the topics, but you need to go into the manner that when you cover 2 to 3 questions on, you are satisfied. You know you have covered 80% of that topic or 90% of that topic. You know, there's no need to cover 100, but the 80 or the 90% needs to be what is the most common issue relating to impairment or to PPE and so forth. Okay, so just take note of that. This was quite a nice question, quite detailed. When I say detailed, a lot of stuff happening, but it was not deep. Okay, so this was broad, not deep. So make sure if you're doing a question that is broad, you think about the deepness. If you're doing something that is deep, you think about the broadness. So in that way, even though you're only running through 2 to 3, you are covering as much as someone had done 10 questions. The only difference is you are actually learning, where the person doing 10 questions may not necessarily actually learn, because it's all about quantity and it's not about the quality. So just take note of that. And another important aspect, which is critical, and this is why it's so critical, because many have said, well, so for FAC1 and FAC3, have seemed to be the most challenging out of the 3 courses I've been offering. Most of the issues is not that they that the work is difficult or they don't know the work, but it's because of time. So you can see there was a lot of stuff happening over here in the 3 hours that we need to do, right? So you have 3 hours that you have to write, and there's a lot happening. So the way you're going to get this right, number one, is the way you're going to train, right? The way you think through your question, the way you think through a topic, the process that you are developing. And then number 2 is your exam technique. Exam technique means that the way you set out your question, the way you set, the way you set out your solution is exactly the way you're going to set it out in the exam. Okay? Don't practice one way and in the exam you do something else, because now your brain needs to learn a whole new thing, and that is unnecessary load on your brain. So when your brain wants to do a calculation, your brain must exactly know how it's going to set it out. Like this, when I must do present value calculation, I know I always set my present value calculation like this. I don't do anything else. I know I always start with the unknown, and then I go FV, whatever. That is how I trained my mind to think, right? Same with depreciation, for example. Even though with depreciation, you're not always going to have a residual value, but I've trained myself to always tell myself, when I'm using straight line, cost minus residual value. So I have put in a residual value over here. So even if there wasn't a residual value, I'd have put it in. But for you, you don't have to put it in. But what you need to just do is train your mind to at least think about the residual value, so that you can decide whether you should include it or not. So if there's no residual value, you don't include, but at least you have thought about it. Same when it comes to depreciation. My mind already knows that I must look out on when the asset is ready for use, because they can give you the date you purchased the asset. They can give you the date the asset was ready for use or available for use. And they can give you the date where the asset was actually put into use, okay? So remember, you don't depreciate. You don't start depreciating from the date of purchase. You don't start depreciating when you actually use the asset, but you start depreciating when the asset is ready or available for use. So you're training your mind to think certain stuff so that it becomes so automatic that when you read, because it's automatic, your subconscious mind is aware of it. So when you are reading, your subconscious mind is already feeding you with the things helping you to identify what is relevant and what will be used and what is not relevant. Remember, you're on CTA level. Not everything is relevant. Most stuff will be relevant, but not everything is relevant. One of the key things that you need to learn, which is needed in the real world, is to be able to identify what you need and what you do not need. Okay, so just be aware of that. So that is all I'm going to cover for today. I am going to stop here. So this is the last lesson of FAC1, FAC3. By tomorrow, 2 o'clock, I'm going to upload, and I'll message you. I'm going to upload the mock exam. So I'm going to put it together now tonight, and I'm going to upload it onto what you call the new. Once you're done, whenever you are done, so try to get done by end of Sunday, and then you just submit it. I'm going to take the week to mark it. Remember, part of the whole Accelerator program is, if you have any questions, you can ask me. Preferably, you ask me after the 3-week program. So after the 3 weeks, because then I'm free to actually, if you want a 15, so I'll have like 15 to 30-minute slots available. I'll tell you. I'll tell you what times I'm available, and then we can have like one-on-one if you have any specific question when you study in your last 2 weeks. So why not so much in the 3 weeks? My 3 weeks is quite jam-packed. So I'm running with CTA, I'm doing the MAC 3702, and I'm doing like the Zimbabwe guys students, and I need to mark the mock exams. So I'm not going to have so much available time now. But after the 3 weeks, I'm going to have time available. Then we can, if you have anything. But you at least send me a night the day before, because a lot of questions require me to read the entire scenario. So I don't want to read the entire scenario in that 15 minutes. I need to kind of already have an idea what the scenario is. And so if you have any question, I'm able to answer you swiftly within that 15 to 30 minute slots. Okay. Is there any questions from your guys' side? Oh, we will be uploaded. Okay. Any other questions? So it's going to be on the I'll upload it on the platform. So so when you registered, you should have gotten login details. So when you go to the Edion's website, there's a button on the Edion's website called Student Login. Click on there, you log in, and then you should have access to the the Accelerator course. And then what did I say now? Yeah, and then there it will be. When I upload it, I'll explain it to you. I'll first test before I let you know. So you can write it, either you type it out or you write it. What's important, you need to make a decision now already, whether you're gonna write physically in the exam or you're gonna type out in the exam. So whatever you're gonna do in the exam, you need to do that with this question, okay? So that is part of the practice. Don't write on paper for this, and then in the exam you're gonna type out, or don't type out for this, then the exam you're gonna write out. So please make sure how you're gonna practice is exactly what you're going to do in the exam. Try to answer the entire question, but when you answer the question, for the 3 hours, write in one color, and then after the 3 hours, write in a different color, so that you can see how you fared for the question as a whole versus how you fared when you only under the 3 hours. Okay, so just be aware of that. Okay, any other questions? So no other questions. Okay. So so I will share with that tomorrow. So try to give it your best shot for the, what you call it. If I'm you, before you start, right? Before you start, just try to take like a few minutes, and maybe on a piece of page, write all the topics of what you've covered, right? So throughout the year, write the different topics on a piece of paper of what you covered for the year for fact 1, fact 3. Then as you look at each topic, to yourself, just talk to yourself or in your mind, try to explain to yourself the key issues. Okay, try to explain to yourself the key issues of that topic. That will give you a good basis to start. And then just write the exam, write the mock exam as far as you can. That will give you a good gauge of what you need to work on and what is you still need to and what you're okay with. Okay. Yeah, I'll share the Excel calcs. What I'm also going to do, I will also make available this weekend the test, like test 1, test 2, test 3, test 4, those boot camps I'll also make available, and then I'll share with you guys so you guys can have a look through it if you want. Is there any other questions? Any other questions? You guys are good to go.